Hello, everybody. It's Tortoise Investing. We got a new position in the portfolio, and it's been a little while since I've done a portfolio update and gave you a quick little look at everything. So that's what we will be doing today. Before we jump into everything, if you are new, welcome. We're at 277 subscribers and counting. I appreciate all of you who are new. And if you want to join and you haven't already, go ahead and hit that red button. Super free, super easy to do. I greatly appreciate it. And make sure to comment down below. Literally anything makes the YouTube algorithm very happy. So let's go ahead and take a look at the portfolio here. Year to date, we are up 8.66%. The S&P 500 is up 6.12%. So we were beating it by about 2% overall. I would go through all the pies so you can see the allocations and stuff, but I've got a thing through Qualtrim Insights that I think is going to be a little bit better for that. But yeah, this is the breakdown of everything. Really, the big thing, the big helper is definitely Microsoft. We are up really big on our Microsoft position. My only regret is not buying more, and I swear to everything, if this recession that's supposed to be coming, if there's a big downturn and this dips below 250 again, you're going to see this portfolio go all the way down to like 7, maybe 8 holdings, because I'm going to load up everything that I can in Microsoft that I don't count as a necessary need or have to have it. But yeah, this is the percentages and everything. I won't go through all of them. I could just sit here and tell you all the percentages, but Ian's got eyes, and I mean, there they are. I think it's a nice looking little portfolio. But yeah, over here on Qualtrim, we can do a quick little look through all the percentages and stuff. There's a recent update with it, and it is amazing. So yeah, 13.6% of our portfolio is Microsoft, 13.5% is Lowe's, 12.1% is Vici, 10.9% is MSCI, 9% is SP Global, right at 9% is a MasterCard, 8.5% is Visa, 7.6% is Costco, 5.5% is Pepsi, 5% is Estee Lauder, there's our new one, and 4.8% is Automatic Data Processing. So there's this cool little like gains and loss chart here that you can see. Pretty much just a breakdown of the portfolio as a whole to see how things are going. I really like this new update, and I think it's real neat. Alrighty, so yeah. And here's some of the dividends that we've got coming in. Excuse me. I've got a dividend coming in this month from MasterCard for 91 cents, Lowe's for $4.69, and Costco for $1.06. So very nice, very nice. Keeping that dividend income coming, and just going to be reinvesting those into whatever is lowest. I don't drip. I put it into what needs it most, or I just save it if nothing's down. That's what I do. Now, the thing that I sold out of, Dollar General, go ahead and give my reasoning behind it. With Dollar General, I had 2 retails already in Lowe's and Costco. I bought in a Dollar General because I felt like I got into it at a good deal, and I didn't really know what else to buy at the time, and I didn't really mind holding it. But the more and more deeper that I dive into it, there were a couple things I didn't like all that much. For one, the dividend yield, the dividend raises, it did slow. It was not at its 10% that I like to see my dividend stonks. The debt to cash here, the debt is increasing, and the cash really isn't going anywhere all that much. And the free cash flow on hand has took a dip, and I don't know how long it's going to take for that to recover. I like my companies have a lot of free cash flow. I like not increasing debt. That's never really a good thing. But yeah, that was mainly the reason behind it. They're not in a lot of debt, and of course it's not like something extraordinary. It's just there was a really good opportunity to open up a position in Estee Lauder. So they released their earnings, and I feel it was an extreme overdue. The stonk dropped like a rock. At one point, this was at 280. I got in at 201. And I'll show a stock comparison chart just so you can see everything. But let's just go ahead and do like just a quick little breakdown here. Free cash flow yield is 1.31%. They have more cash than debt on hand. Very nice. They got a yield of 1.08%, and their payout ratio is 59%. So no fears there of that being in trouble. They got good growth. Everything looks good. If you go here, I don't really count capital leases because that's like their buildings and stuff. But yeah, they do have a little bit of increasing debt, but it's went down here. But as their debt's going up, so is their cash on hand, and their dividend yield, their dividend percentages over the last 5 years, 11.6%. Over the last 10 years, 13.8%, and it is just trucking right along right there at that 10% line. The return on capital employed is like 20% reliably. They've been doing share buybacks slowly but surely. And I don't know, I just feel like it's a great company. If you stack it up through Portfolio Slab with with Dollar General and the SP 500, over the last 5 years, that's kind of everywhere. There's been some chaos since 2020, so I don't really feel like a 5 year is a good thing to look at anymore. The more that I think about it, we're halfway into 2023 almost. So if you look at the 10 year, Estee Lauder was just going on a run. And then, last year's recession happened in 2022, and it's just been slowly trending down ever since. Well, I feel like we are at the tail end of this bear cycle. I think by next year, easily, we are going to be smiling and making some dollar bills. I'm not a financial advisor. It's just how I see things. And when a company that was beating the S&P 500 and Dollar General at one point by 500% overall drops down, and Estee Lauder it's a makeup company, and it's one of the big ones. The only thing that's really their biggest competition is Olay, and it's like the Visa and MasterCard of the makeup world. It's like, the Coca-Cola or the Pepsi. Like you got Olay makeup, and then you got Estee Lauder. And the other thing is, as I stated earlier, I already have two big retailers in Lowe's and Costco. Add Dollar General in there. I wanted a different consumer. Like, I wanted to spread out a little bit, not have just another box retailer in there. So yeah, I went with Estee Lauder. I felt like this big drop was definitely a buying opportunity. And I mean, people are like, what is going on? And people panic sell, buy the stock. That's what it did. But yeah, that's just a quick little look at everything. If you've got any questions, if you're wondering about anything, if you'd like me to look into anything more, let me know. And yeah, hope everyone has a great weekend. And until next time, see yous.